Welcome to TheoTRADE. This is Don Kaufman. It's August 18th, 2023. It's Friday afternoon. There's just about 5 minutes left to go to the cash close here. I gotta tell you, the volatility beast rises. Yeah, that has pretty much been the theme of this marketplace throughout the course, well, of the entire week. Look no further than what's on your screen right now. Again, we're coming into the cash close here. The week is it's almost over, but it's not over fast enough because the S&Ps in just the last few minutes, we're trading 43.80. We just ripped to 43.96. We've completely reversed, and that, people, pretty much sums up something that we have not seen in a long time, and I've been talking about extensively, some two-sided trade. Look, we have opened the can of volatility. There's no putting the beast back in, and I'm going to explain precisely why here in this weekend's update. Let us begin with a look at some of the daily action. Forget about like intraday. Intraday, it's fairly wild. I mean, again, this is not just about like sell side activity. This is obviously the daily. It's been a rough couple of weeks inside of the marketplace. Again, a lot of people are pointing fingers towards, China, economic contagion. We'll cover that in a moment. Before we get there, though, one of the best places to look at this, let's go to the SPX. I want to go to the SPX because what I want you to see is, well, how much damage has been inflicted to this marketplace. I mean, for the most part, what are we really talking about? So we've reversed in the S&Ps. Big reactionary high here is 46.07. Where are we trading right now? 4,300 and change. Again, I just want to put it in perspective. So what? You reversed by what? A little over like 200 handles inside of the S&Ps. Okay, because in the larger scheme of things, okay, just to get back to where we were, at like 4,200, you got a lot more sell side activity. Okay, and if that is to drop back, again, the marketplace literally exploded to the upside throughout the course of much of this summer. Again, there's a little bit of give back over here. The question everybody wants to know, though, is, hey, are we going to see some more sell side? One thing that is very transparent at this point, we have definitely opened up some two-sided trade. That does not necessarily portend more sell side, and that's exactly what I'm going to get into here on this update. So the first thing that's a standout throughout the course of this week is we smashed through the lower edge of the expected move. So I'll talk in detail about expected move towards the end of this video. It's about a $65 expected move. We smashed through it, hit all the way to a 2 deviation. We bounced a little bit back, though, today. I mean, I don't know how much of a bounce it is. The S&Ps are still, they're going to close here in 2 minutes, and they're going to be massively unchanged. Nevertheless, some damage was inflicted on the week outside the expected move. Now, with that, you should see an expansion, of course, in volatility, and we're seeing just that. But, okay, before we start talking about volatility, getting too in-depth over here, let's not put the cart before the horse. What did the Nasdaq do? So you can see in the S&Ps, and this is important, the S&Ps, good size crack of the expected move. What did the QQQ do? Right? Nasdaq is critical because, from my perspective, Nasdaq right now, if you're to go lower, Nasdaq has got to be the driving force, and it isn't this week. And that's the one thing that's going to surprise a lot of people is the Nasdaq, yeah, it's weak, but it's like barely outside the expected move, where the S&Ps took a little bit more of a dramatic hit. The Nasdaq, it's kind of holding it together, right? What do you got in other sectors? So we just looked at the QQQ, which is obviously Nasdaq. We looked at the S&Ps. Let's go over and look at the financials. All right, why are we looking at the financials? Well, financials, another key sector in here. Oh, there you go. It's almost, again, when it comes to the financials, it's almost a 2 deviation move to the outside, right? So for the most part, you started the week up here at 35. We're ending the week here, 33 change, right? That's a rough move. No question about it. The financials definitely took a big hit on the chin. They're going to end the day unchanged, but damage has been inflicted to the financials. Meanwhile, go back over to the energy sector. Now, I'm going to talk extensively about energy, okay? Again, in a few minutes, because energy I'm a little bit perplexed on here. you know, which again, I'll cover. But if you look at it from an auto expected move point of view, energy early in the week was getting decimated and actually pulled back up. Look, everything for the most part across the board comes to sector after sector after sector is down. And of course, somebody, of course, you know, oh, what about like retail? Bring up the XRT. Okay, XRT, even retail is taking a little bit of hit because, of course, you know, we saw some of the big retailers had earnings, including the likes of, you know, Walmart, Wally World. There's the closing bell. Not a second too soon, too, because we finished literally unchanged on the week. So you look at like Walmart, it's got a little bit of a bid back under it. We can look at Target, but again, from a sector point of view, markets got beaten up pretty much across the board. Neither here nor there, right? So all right, we now know that the financials, okay, were kind of the driving sector to the downside. In terms of a percentage basis, they took the hit. Obviously, the Nasdaq was weak, but okay, it's again, it was not what I would have expected, and that is, if you take a look at the SPX, you would have expected that the Nasdaq would have driven even further, okay, lower than SPX, and that's just simply not the case, which leaves a bit to be desired, you know, to the downside. And again, it's still going to come down to, you know, what tech is going to do, which I'll talk about here momentarily. First, okay, as I talk about the volatility beast rises, well, we're going to talk in depth about volatility backwardation, which has got me, again, a little bit perplexed in here. But before I get there, China. With China, I'm actually going to pull up the FXI, okay, because there's one thing I want to point out about the FXI. So, again, a lot of media is talking about China contagion in the marketplace. Like, look, Chinese data right now, economic data, brutal. Okay, they're slowing down. They're trying to juice their economy with anything and everything they possibly can. Okay, might be too late. They're going into, you know, maybe a real estate crisis like we were here in 2008, but bubbles are bursting all over inside of China. Nevertheless, when you pull up like a 5-year in here, I just want to show you we're nowhere near some of the lows, that we were even last year. So there would have to be considerable room for improvement to the downside, okay, in the Chinese market itself. But look, the stocks don't necessarily have to follow economic news because some of these stocks are being juiced by China. I mean, like Chinese version of the Fed is out there spraying capital with a fire hose at this point. But it's going to be worth watching because a break below some of these reactionary lows, like below 25, I think you actually have a clean shot into the 20 handle inside of FXI. All right, let's push that aside for a second. Next in the docket, okay, before, okay, I forget about this. Look, I know that people are looking at technicals, okay? I know you're looking at the spiders. I know that you're looking at all different types of technicals. If you're looking at, like RSIs, they're showing oversold in the near term, okay? In the near term, look, I don't have to look at the technicals to know that in the near term, you're actually oversold. One thing, though, that I want to state, and I want to be heard on this one, if we're going to rally, you got to be really careful right now. If you're going to buy any options on a rally, you better buy like the shortest duration possible, like 50 delta kind of stuff, because when we rally, they're going to vol crush. It's big in a big way. So even today we didn't see a rally, right? We didn't really rally back. We finished unchanged. Nevertheless, if we have a rally like on Monday, and again, we're probably overdue for some type of a rally. I say that, but at the exact same time, I always tell people, never forget, markets do not tank from absolute highs. Markets tank, okay, from horrendously low levels. Nevertheless, yeah, we're in some oversold conditions. So if we rally, you got to protect yourself because the second we rally, okay, they're going to crush volatility like you have never felt before. All right, they're going to knock this VIX all the way back down to the 15, maybe even to the 14 handle. Almost immediately, they will crush the volatility out of that marketplace. So watch vol crush because all too often, people are going to rush in and they're going to want to do things like, I'm going to buy me some calls. Okay, where are you going to buy calls? You're going to be buying calls somewhere in like the spiders and like a Monday morning. I'm going to tell you, there's a lot of extra juice that's going to be packed into those. And those things are going to get their clock cleaned if we do rally. So be very, very careful. Use spreads, okay, when and where possible to control some of that volatility risk. I don't often say this, but you might even want to use a spread on an intraday basis. All right, pushing that aside, before I get deeper into volatility discussion, okay, I want to talk about tech for a second. Tech is down, but it's definitely not out. As I was saying about the Nasdaq, okay, the Nasdaq, it's taken a little bit of a hit, but with this, on a percentage basis, let's look at it from the big reactionary high to where we're basically trading right now. It's about a 7% hit. It's just about a 7% hit. Now, there are a couple of tech stocks, specifically like Microsoft. Talked about it extensively because Microsoft breaking under that 320 level, I think was absolutely critical. But I'll go from the big reactionary high to where we're presently trading. That, people, is about a 12% hit. So Microsoft's kind of in a correction territory. But the reason I'm bringing this up is you're like, oh, but Apple even was up today. Look, Apple, though, has been taking a big hit. It's in heavily oversold conditions after that earnings period. Taking a look at Amazon, okay, hasn't even skinned its knee. Taking a look at Google, look, I took big short positions inside of Google throughout the course of the week. I'll explain a little bit more about that. We talk about some of the trades that I've done. Nevertheless, Google hasn't even taken any hit whatsoever. That could be incredibly opportunistic because if we're going to continue to go down, they got to do it on the back of something like Google. Look, they're not going to hit stocks, one by one. They're going to hit them indiscriminately across the board. Meta's taken a little bit of a hit in here. Tesla, obviously, Tesla's actually at the forefront of this. Okay, NVIDIA has earnings next week. It's actually one of the critical junctures for this marketplace specifically. I want to say it again. NVIDIA has earnings. It's on the 23rd. You better pay attention to that one, okay, because this could set the tone for the remainder of the week inside of tech. And as I said, okay, tech's down, but it's definitely not out. Opportunities are really there, though, specifically inside of Google, okay, and Amazon. I mean, they're down negligibly. It's just they're not even really down with other tech stocks getting hit. I mean, other tech stocks like your Apple and Microsoft, they're in full-blown corrective territory. Right there with this thing, Meta's from this thing, the thing formerly known as Facebook. Meta's off the 320 level into the 280 handle. So, I mean, there's some damage starting to be inflicted, but we haven't seen that point where they're hitting them indiscriminately. That's what you want to see. And there's opportunity in that because as I just identified, Google and Amazon, okay, look, if tech's going to continue to go down, these things are going to be on the chopping block. Mark my words on that one. The only question is if, again, they're down, they're not out, NVIDIA can be a really defining factor throughout the course of next week. And I hate to say that, but it's going to be wild around that earnings announcement, okay? That's your AI bubble. It is. It's all in there. Now, I found something else very interesting. Volatility backwardation. So a lot of people look at VIX. VIX, I always say, it's my predecessor's volatility, indicator. I'm not that much into VIX. VIX spiked. It didn't really contract today. It's still in the 17 handle. But one thing that struck me as odd, okay, very, very odd, is that the volatility futures. For those of you that don't speak complete and total volatility geek, the volatility futures, there's what we call contango and backwardation. Okay, they're still in a very definitive, contango, but they're a lot closer than I would have expected. What I'm basically saying is the September volatility futures are trading 1835. The October volatility futures are trading 1886. I would have expected, a much more significant difference. And you can actually look at this and you can chart this on what's called a depth chart. This is actually a depth chart. And what a depth chart is doing is it's plotting, what the volatility curve kind of looks like. And you can see the differential in here, right? And kind of cruise over. And you go, oh, what good is that? Yeah, you're right. What good is it? Well, you can actually compare this, right? I'll compare it to exactly a month ago. So let's look at a curve from like a month ago. They're like, oh, but then you can actually come over here and percentage adjust them. The point that I'm trying to make right now is the distance, the distance between volatility futures looks a little tight, given the fact that we've just seen just a little bit of risk, Again, the distance looks a little bit tight, meaning that we're really a lot closer. We're a lot closer to flipping over into a backwardation. Now, let me not speak geek for a second. If we flip over and short duration volatility futures start exceeding back month vol futures, that basically means we're in the throes of, the beast. As I said, the volatility beast rises. The only thing is that beast going to jump up behind you and start, chewing on your head. There's a hint of that in the air right now, because again, this volatility futures marketplace, there's a lot of capital in there, and this marketplace does not lie. All right, there's definitely like an angst inside of this marketplace. That's the only point that I want to make with it, because there's nothing definitive. The only thing I can tell you that's definitive about the vol futures is that, they're getting a little angry. That's it, and there's a lot of traders that are on their game because of it. If you look though at something like VVIX, the volatility index almost spiked to 110 and completely reverted back down. Does that mean risk is off the table? Not necessarily. It just might mean that a lot of people hedge themselves already inside of volatility contracts. Again, I'm inclined to believe that we're a little bit oversold conditions and you got to have a day or two of rally. That doesn't necessarily mean we have to rally. And I believe at this point, any rallies are going to be sold into and sold into heavy. I think a rally at this point is a great opportunity to get short. You know what the problem with that is? Everybody else agrees with me. So for the most part, any rally is going to be met with sell side. Okay. All right. Onward from there. A rally in bonds. Okay. So bonds annihilated. In fact, if you're more comfortable, we could look at TLT. Annihilated. Can't stress this enough. Do realize the TLT was trading like 102. A couple of weeks ago, it's actually down to 93. On a percentage basis, this is a phenomenal move. A better way maybe to describe bonds is take a look at the interest rates, the TNX. I drew this on the screen the last couple of weeks where I said, I'm warning you, okay, we could go what we term parabolic on the interest rate. We did. We absolutely straight up. I would assume at this point, okay, the opposing is going to happen. I think at some point in the very near future, if we continue to see, especially if we see sell side activity, I want to explain something. I think that we could see bonds rally. Okay, but if bonds are rallying, it could mean that we're selling out of S&Ps and rotating back into bonds. That's activity that we haven't seen. That has been much more the historic norm where, and bear with me here, when you see selling in the S&Ps, you typically see bonds rallying. You have not seen bonds rally. They've done the exact opposite. Well, at what point does selling in the S&Ps mean economic slowdown? It's all over. And if it's an economic slowdown, they're going to turn around and start buying the bonds. Take interest rates actually down a little bit. We just haven't seen it. Speaking of that, we are going to hear from the likes of Jerome Powell. It's going to be next Friday. I believe it's August 25th. I think it's 10:05 Eastern time. He's going to be speaking at Jackson Hole. So it's the only time that you're really going to hear much out of Jerome Powell before what is going to be a September meeting. Nevertheless, okay, I think, again, the bonds, they could actually stand a significant rally, especially if the S&Ps start to continue to sell off from here. All right, last thought, economic slowdown. If we're actually going into an economic slowdown, we're going to see bonds rally. Shouldn't oil take a hit? Oil took a very, very mild hit. Very mild hit. But again, if anybody talks about economic slowdown, expect oil, okay, and the energy markets to also take a much more significant hit. All right. Moving on from there, as we do each and every week, get your trade on this week's profits and losses. Look, I traded this week. No question about it. I traded this week. This is just my one account. What is this, last 7 days? 34 fills. Okay, that's just that account. Okay, in an IRA over here, 11 fills. It just goes on and on and on. All I did this week was execute. I got out of some positions that I needed to get out of. This is actually over in Tasty. Okay, in Tasty Works, I've got a bunch of fills here. The whole week was just trade execution. So I closed some short calls. There were calls that I was just holding on to for a long time, getting beaten up in, closed them. Okay, closed them, well, extremely profitably, 50% gain. I closed United Airlines in-out spread for 55% gain. I closed, so I closed the United Airlines trade. I opened trades because of the volatility. I opened trades in ES, okay, which is an inflection point spread. That is actually selling strangles with a hedge. Okay, I did it in ES, MES, and spiders, different ratios. If you're kind of curious about the trade inside of the spiders, okay, and cruise over to that. specifically inside of the spiders. I did a 4-12 ratio, 4 hedges to 12 short strangles. Lovely. Okay, went out there, actually sold some puts inside of the bond market and TLT. Okay, I mean, I was all over the place, firing position. So I also opened up some short puts inside of the ZB. Okay, the bonds, if they do rally, okay, I'm positioned beautifully for it because, again, I have actually sold some premium. So I sold premium in the S&Ps. I sold premium in the bond market, TLT, spiders, even did a little bit of work inside of the QQQ over there. And then one of the bigger positions I put on throughout the course of the week happened to be, in fact, inside of Google. So I kind of fathomed, like, if Google is going to break to the downside, all right, I put on a big boy $10 wide spread, and I did this a lot of contracts and a lot of different accounts. But this is a 120, 110 spread, 91 days out. The trade, though, is 100%, again, 100% financed by having sold premium. So I went out and sold premium to finance the Google spread. So if the Google spread goes against me, look, it is what it is. It is what it is. I'm not too concerned about it. And as I said, I did this in several different accounts for some of the portfolios that I'm running over here. So I've got Google positions in the Catapult large. Okay, I've got Google positions over here in a portfolio margin account. Look, weeks like this, it's opportunistic, doesn't get much better. I mean, trade like this is this is what you wait for. This is what you hope for in terms of like P&L people want to see on the week. Started the week at 455,000. End of the week at about 488,000. So onward. I usually keep about $500,000 though in this account. Let's finish it up on this update here, SPX Expected Move. As I stated a little bit earlier here, the SPX was anticipating a $65 move. We obviously ended up fairly well outside that expected move. Question is, what are we expecting this next week? Literally goes exactly 7 days out. This is the expected move, okay? We're at the time, we're 15 minutes after the cash close, $79. You're looking at a $79 expected move. Now, hands and feet inside of the vehicle, because I'm going to tell you, that is one of the bigger expected moves that we've seen. We had some significant expected moves because of the CPI number like 2 weeks ago and ended up doing nothing. Okay, this next week though, look, as I said to you guys, it's the title over here. The volatility beast has arisen, okay? And with that, it's going to get a little bit crazy. As I said, I would anticipate that you will have, okay, some big ripping attempts at rallies. If we do get rallies, there's going to be a volatility crush. If the rally can sustain itself, and it's not going to be easy in sell side like this, but if the rally can sustain itself, it's an opportunity to sell into it, right? And you're not going to have that great feel or much time, okay, to ultimately do that. In sell side activity, look, there's chum in the water right now, and people, okay, they like it. We're all running around right now like a bunch of volatility, okay, starved animals. Well, some of those animals are starting to be fed, except I don't think it's over. I think we have much more upside in terms of volatility. So again, be aware. Big expected move next week, okay, NVIDIA earnings, but overall, it's trade, okay? It's trade at this point. We opened up to two-sided trade, doesn't matter, okay? News announcements and so forth going to mean a lot less. Look at some of the volatility just today, all right, with ultimately nothing driving us. Thanks, everybody, for joining us here at TheoTRADE. Have a wonderful weekend. Bye-bye.